Hey everyone, my name is Quincy Freeman. Thank you so much for visiting and seeing our presentation today. What I'm going to be speaking about is DSCR, finding out what that is, refinance, why to do it, and purchase, where you're looking to go next for your dream home. Now, with that being said, let's get started. Number one, it's all about game night. You have to enter the game right. And what is the game, let's say? It's not a video game. It's not an alternate reality or we're in some kind of simulation. Whoa. But the game really is about capital, how to leverage debt, how to gain reward from leading indicators and lagging outcomes. What every successful book and self-guru talks about, this is what we're explaining, how to go from average to investor. Now, let's get started. Now, tonight is our game night. Now, what does that mean? We're going to see how to play, and that is focusing on DSCR, and I'm going to talk about what that is, refinance, and purchase. Now, why do you want to get in your own dream home? So you can be safe. You could have the benefits of all physiological elements, right? Food, water, shelter, love, belonging, self-actualization, self-esteem, right? How can you feel good about yourself if you're not in a good environment? So if anybody goes on Maslow's hierarchy of needs, you can see exactly what I'm talking about, starting from the physiological all the way to the self-actualization. Now, with that being said, let's kind of get started. Now you're going to see this video as you're entering into the home and you're into your new open house and you're wondering how can you possibly be able to purchase something like this? Now, what if I was able to tell you that you didn't just have to rely on your own W-2s or your personal history or even your work history? You could rely on the property's ability to gather income. Now, what does that look like in especially a luxurious home, something like this that you're seeing right now? Well, besides all the modern appeal and all the good-looking aesthetics, it all breaks down to a nice, simple breakdown. And I want to make sure, are you ready? I think so. Let's get started. So, what is DSCR? DSCR is debt service coverage ratio. Now, you're going to see these nice-looking flyers, and I'm going to explain all of them because you not only can dream it, you can have it. So let's explain a little DSCR. For first-time home buyers, for first-time investors, you do have to have a primary residence. So if you're foreign national, meaning you're outside the country and you're just coming to move here, let's say from London or Canada or anywhere else, well, we're here to help you. So all foreign nationals, everything is basically the same. All you need is a passport instead of an ID. You don't need a primary residence because we're assuming your primary residence is back in your home country. So for all foreign nationals, don't worry about it. But for everybody that lives here in the United States, that is something for you to think about. So this is not first-time home buyers. This is for first-time investors or even experienced investors. What I love so much about the DSCR is that you could even have a lower FICO score, right? 600, 640. You're always going to want the best rate. So that's always going to propagate the best score. So if you're looking at 720s, and of course anything above, then you're really sitting pretty. Now, what does DSCR kind of break down to? Let's say your mortgage and your HOA, your expenses, and all your payments equal $5,000, let's say. And your rent, your long-term or even short-term. Now, long-term meaning tenants that are staying in there for 12 months. Short-term, or we could go mid-term first. Let's say a traveling nurse is in there, and the traveling nurse is staying for 3 months, 4 months. Not fully a year and not just 1 month. Now, if it's under 31 days, that is declared a short-term rental. Now, what is a short-term rental? Airbnb, Booking.com, VRBO, you name it. So if you look on AirDNA, which is really cool, and I could always do a breakdown and a free consultation for anybody that's looking at this presentation, if your property is going to be rentable, if it's going to be able to circumvent all the mortgage and expenses with the rents, so it's always the same price. Let's say 5,000 in mortgages and 5,000 in rents. That's a DSCR ratio of 1. 1 meaning complete. Now, let's say if the DSCR ratio was 2, that simply means that the mortgage is 5,000 and your rents are 10,000. Let's say your Airbnb is renting for $500 a night and it's making $10,000 a month. Congratulations. You have a DSCR ratio of 2. And that's how you get qualified. Give me a high credit score and give me a high running property and you're going to be good to go. 2 thumbs up for me. Let's move on. Now, what I like about DSCR, and before I get to the next stage, who can answer what DSCR is already? I'll wait. I think some of you got it. You're thinking on the right track. So let's clear it up just even a little bit more. why grow your real estate with DSCR? Well, you don't have to really focus on your work income. You don't have to focus on your W-2s. You don't have to focus on bringing your taxes to the table. You simply only have to bring your credit score on one hand and the property making an income on another. What I like about this is that you can really grow your empire. One of my lenders, we do even 20% down, 15% down, sometimes even 10% down, and 5% can be gifted. 5% we could look in your 401k, right? So you're no money down with the DSCR loan. I love that. Debt service coverage ratio, making sure your coverage ratio, your coverage is masking your debt so that everything is now blended together and it's taking care of one another. We always say, give us a ratio of 1 or above, and now you know exactly what that means. So, with that being said, you know that you can be gifted. Your funds have to be seasoned, meaning staying in the bank for at least 60 days. That way, we know nothing is fraud, right? There's no claims that's making on your money. But with that being said, I love DSCR. I'm helping one investor right now with a $2.2 million property. He's getting a 1.7 loan. And his rates, I don't want to quote the rates, right? But he's really in the mid-sixes. I cannot believe it. 6.75 to 7. He wants to put down maybe even 20%, so it's going to be about 7.25 as the rate. Can you imagine you're getting a DSCR loan from the property, no real money out of your pocket, right? Because of the gifts and the 401k and things like that. And we could get so creative, or you could do the traditional 20% down, and we can go from there. And we can go all the way up to 10 doors. What that means is, if you have, let's say, a house, a quadplex, and 2 more doors, or even inside the same building, we can be able to do that. If it's more than 10 doors, you're looking at multifamily, and we'll get you on a CMBS and another kind of program. But for today, we're talking about DSCR, and this is why it's so cool. And remember that limitation. It's less than 10 doors. So if you have an apartment building that's 300 doors, it's probably not going to be with DSCR. It's probably going to be a CMBS, which is commercial mortgage-backed securities. We could talk about that in an entire different presentation. But today, it's all about debt service coverage ratio. I know that you guys are going to love that because it's when your property's making money and it's non-recourse. What does non-recourse mean? It means if your property fails, if the rents fail, if everything fails inside the loan, you are not going to be personally liable for that. Your property is going to be taken from you for the lender or for the bank, whoever it lends you the money. But that means they're not going to go after you personally. So always make sure that you're protected with an LLC, even a trust, and get your property. So let's move forward. What I like about the DSCR ratio is that once you understand it, you don't need to worry about your income. You don't need to worry about what you specifically did in the past. You could get a property based on the next 12 months, not on the last 12 months, not even on the current month, but on the next 12 months. We'll see what's going on with short-term rentals and AirDNA. We'll look it up. Let's say it's forecasted of $120,000 a year, $10,000 a month. You know your mortgage payment's going to be $4,000, $5,000, $6,000. That's a perfect DSCR program for you. Now, with that being said, I do want to move on to your new property is your new asset. So once you have one DSCR program, once you're in the DSCR program and you have your first property, now you understand the tricks of the trade. You understand how it works, how to fly through the qualifications process, because sometimes it doesn't take 6 weeks. It doesn't even take 4 weeks. It could take 2 weeks to get you all your money. And I'm talking about more than $1 million based on the property being able to rent and you just being a good citizen of America. Hey, having a nice credit score so that we know that you're a good borrower. With that being said, let's move forward. So I'm going to talk about the checklist and the qualifications. You're going to see other people call it NONI, non-owner, no income. Now, with this is really, really cool. You're going to see credit report, 2 months of reserves. And I don't want to go into this too much because, hey, it's a lot of qualifications, but not really, right? If you see it, we're talking about refinances, purchases, and cash out refinance. And we're going to discuss that in a little bit. But for right now, take a little quick gander, take a glance, take a view at this small little checklist because that's really all you need. It's so cool. Let's move forward with what it does take to be in this real estate empire, to be in your real estate guru type of building enterprise, right? And I want you to be able to cash your money on the left and be able to buy homes on the right. And what we call that in legal terms is 1031 exchanges, where you're not paying taxes on your money, you're putting your money back into the bank and buying a new property. So imagine buying a $150,000 property, put that into the bank, it's sold, you get a $200,000 property. And the same thing, 1031 exchange, and we could talk about that. But I'm not a legal advisor. So disclaimer, please talk to your tax or legal consultant or legal attorney for any legal work. Thank you so much. Now, next, let's move forward. What is BRR and why is it even important? BRR is basically buy, rehab, refinance, repeat. Well, you're going to need a mortgage broker to do all three. You're going to have to buy it. You're going to have to rehab it. Well, just in case it needs a little bit of work, but who doesn't want some customization or some aesthetic appeal, all right? So after your rehab, you refinance it. You always refinance after you put in some surface level or deep intrinsic contractor and construction work. If the bathrooms and the kitchens and the living room look better, you might as well get a refinance, getting a better rate, a lower term, or even a cash out. Now, how cool is it to get a cash out? Imagine you have a beautiful property that you paid for $1 million last year, and this year it's now at $1.2 million, and you could cash out up to $100,000 to $200,000 cash out, and you could use that $200,000 for your next down payment on your next property. How cool is that? Now, if you didn't want to do cash out, you could always lower your payments. Let's say you were paying $5,000. You don't want to pay $5,000. You'd rather pay $3,500. You could refinance to that. Or, my favorite of favorites, what my mother did, Julie Elizabeth Gordon. I'm so proud of her every single day. She's the one who told me to be a mortgage broker in the first place over 14 years ago. I know, that's a long time. 7 plus 7. We're doing some math today, guys. So, my mother told me to become a mortgage broker because she had her testimony with a mortgage broker and that he saved her so much time. She was in an ARM before, got a fixed rate, and basically refinanced from the 30 years, and then refinanced. What's so great, she got her entire 30 years in less than 22 years. She paid off her complete loan, and she's living large. We're actually in the Virgin Islands, St. Croix, with our second home now, and I'm super, super proud of her. I even have my own property in Rosarito. Beachfront, beautiful. And again, I love DSCR. It's super important to even refinance. A DSCR refinance, we do those all the time. Now, with that being said, she said, Quincy, I don't trust a lot of people, but you're likable and you're trustworthy. I think you should go into being a mortgage broker. Before this, I was helping with films and finance, corporate recruiter for attorneys to accountants, and all over the board, helping millions of dollars to any given company that I would work with and consult. But today, I'm consulting individuals gather from average to investor, understanding how it takes from purchase or refinance or DSCR into a DSCR refinance, rinse and repeat. Now, let's continue. And you're going to see why I love this program so much. Now, what does it take to be successful in this ocean, this vast amount of financing and real estate and which home to get and things like that? Well, all you need, one, is your good mortgage broker. First, you got to be pre-approved and pre-qualified to get any home. And once you're doing that, you can buy your home, and like Julie, you could refinance. Now, refinance is so important. What she did was go from 30 years to 22 years. Now, she could technically retire early. Imagine, I don't put money in your pocket, but I take the bills from your pocket so you're not having any holes leaking in your liquid. It's so cool when you're able to refinance, whether you're cash out, whether you lower your rate so that your monthly payments are lower, or you lower your term. You're taking back time in your life just because the rates are today better than yesterday. How cool is that? So, let's continue. One thing I like about refinance is that you know that you're going to save. An average person saves around $300 a month. You could save $1,000, $1,500. Really depends where you're at. Imagine you're coming from a rate of 10 and you're going to now 6.5. You're probably going to save from $5,000 a month. It's going to be like $2,500. You could save half your payment or even half your loan term. How cool is that? No money out of your pocket. We're able to refinance you just because the rates are better today than yesterday, than last week, than last month. And we're always going to give you the best rate. It's called a net tangible benefit. Remember that. Net tangible benefit, meaning I will not help if you are not truly helped. If you're not getting an actual benefit from a refinance, meaning more than $300, $400, $500, or saving time, or saving, of course, on a monthly payment, I am here to say, I'm sorry, let's take a little bit of a wait. And let's wait on the clock a little bit. Let's get a better rate so that we can get you the best refinance, of course, for your net tangible benefit. Now, with that being said, that's why you're supposed to refinance, and you got to do it every year. I know you're always making improvements to your home, so why not get a refinance every year? Of course, only if the rates are better than you had. Now, let's move forward. And one thing that I love about saving money, that it all counts. You're going to hear Brian Tracy. If you ever hear self-help books or self-improvement at all, it all starts with you. As Abraham Lincoln said, give me 8 hours to chop down a tree. I'm going to spend 7 hours sharpening my axe. And that's basically what you're doing with counting your money, staying accountable to your dreams. Now, why use your money when you could use our money for your dreams? Just save up a little bit, but you don't have to save up too much. You don't have to waste your life in savings when you could start investing. Going from a piggy bank to a real bank, I'm your banker. Now, let's continue. Now, one thing I like about this refinance is that you got to stay attuned, meaning I'll put you on a rate alert. You'll see what's going on with the rates every single day. You don't need to text to call me every single day and seeing what's going on. I will put you on a rate alert. That means that for the exact home, the exact structure, the exact loan amount, the exact thing that you're looking for, you're going to get a ping every single day of where we're at. And that's your news. I call it breaking news because we're getting to your goals quicker, faster, and on time because you get the rate alerts. Now, let's move forward. Now, what's foreign national? Somebody coming from another place. Let's say London. I have my partner, Chris, who works with AI, and he's in London. He's right in Essex. So I know a lot of people love to go to our Europe, our friendly sister and brothers over there. I love them. If you're ever a foreign national here, it is taking 25% as a down payment. We can't get over that, but you don't need a primary residence. So if you're looking at getting started over here, you're looking at getting started pretty fast, you can get an investment property and it could work out better for you than if you got just a regular conventional property. A quick story with Amy and Winston. Amy and Winston, about almost 2 years ago now, they started with me, which was fantastic. They got a DSCR loan instead of getting a regular loan. They were from London, actually. Leslie, our realtor that's on the scene, she always helps us and always helps other foreign nationals come into the country and actually get acclimated with being an easy, seamless process in the home investing environment. So she reached out to me, I reached back out to them and the customers with a three-way call. I saw exactly what they're looking for. They got pre-approved with the DSCR loan. Literally, that example I was mentioning a little bit ago, $5,000 and $10,000, well, that was their revenue, $10,000 a month, and they were doing short-term rentals, so Airbnb, VRBO, Booking.com, things like that. And what's great about that is, after a year, and I do property management as well, so I taught Amy how to do property management. Winston wrote me a letter thanking me, saying, we just visited for our son. Now we're going to get our second property with DSCR. They refinanced already 6 months ago, and they're back in London because they have a vacation home now because they purchased a duplex. So they're making $10,000 off one side of their home, and anytime they're in London, they're making an additional $10,000 as well. Amy left her job, literally, and became remote as her own property manager. So I believe not only this can work, it's worked for me, it's worked for my mother, it's worked for many others. So please make sure that you're refinancing. You're purchasing the right properties with the right product. All right? And make sure it's an investment, not just some savings or save for an investment. Now, with that being said, you're going to see some foreign nationals through the entire checklist. This is kind of what I look at as a matrix so that everybody can see exactly what I'm talking about. And we just have a flyer to the right. So whatever country you're coming in from, we welcome you. Now, with that being said, purchase. I am helping right now a client named Maria getting her second home. I know, that's cool. Second home right here in Big Bear. She's coming from Arizona. And by the way, I lend nationwide. So there's not one state that I don't work with. And if I don't work directly there, I have a partner that does. So I'm always going to say yes because we literally can't make it happen. But your dream is in reach. This was her dream. She always wanted a cabin in Big Bear. She has 6 investment properties back in Arizona that she rents out on a long-term basis. 6 of them, they all have their leases, and she's leaving there for her second home in Big Bear. It's her dream. She always wanted to make it happen, and now she's going to be able to. And you know she's going to refinance in a year, and you know why. With that being said, I am super, super happy to help every single client, and I always say the same thing. If you see me eating at a dinner table, and if there's one person not eating, I feel uncomfortable. It doesn't make me feel good. So I only eat when everybody's eating at the table that I'm at. So I ask you to join me at any table, at any restaurant, because I like to eat together. Let's become liquid from an average to investor, and let's make sure that your dreams is right in your reach. Now, with that being said, if I cannot, for whatever reason, I can't beat a rate. Let's say you're working with US Bank, and we work with 230 banks and lenders. I work with the top 30 that's going to give me the best DSCR, and 7 that specifically manually underwrite for me. But let's just say that I cannot beat the rate. US Bank, and you walked in and they're giving you the best rate of the day, and for whatever reason I can't beat it, you're gonna get sent $1,000 from my company, not from me, so I'm not gonna be mad about it, but from my company. If you send me the locked loan estimate and closing disclosures that they actually are funding you and we cannot do it, we will send you $1,000. You heard that right. So either way, you're gonna win with me. Either you get $1,000 if I cannot beat the rate, or we're gonna save you thousands, tens of twenties of thousands of dollars if we can beat the rate, and that's across the country, banks and lenders combined, because we have most of them anyway. Now, with that being said, I'm so happy to help everybody, not only with $1,000, of course, but that's usually a less than 1% chance. So I will take the bet of the 99% chance, and that's what I say. Give me 1% of your business, and I'll earn the rest of your trust. It's an amazing thing what we're able to do, what we're able to help so many people, and I just want to say, that's how you play the game. And for all the people that are out there, thank you for playing. I'll talk to you soon. My name is Quincy Freeman. I'm a mortgage broker here with the Loan Factory, and I look forward to speaking with you on my next presentation. Bye for now.
Game over.